Hey everyone, John Henry here, Slingshot Futures Trading Group. Thanks for joining me for today's video. Before we start, make sure to subscribe to our channel so you don't miss out on any future content. While you're there, give the video a like and make sure to leave a comment below with any questions you have or suggestions for the next video topic. Don't forget to check out our live stream right here on YouTube, and if you haven't already, click on the notification bell icon down below the video to make sure that you don't miss our next one. Maybe you're looking for a bit more action earlier in the day, then you can check out our free 3-day trial right on ssftg.com's main home site, the home page with a big green button at the top. All right, so for today's topic, taking a look and understanding wicks and how much information they can give us. All right, so coming into the day, first off, like we always do with the candle-by-candle analysis, we've got to take a look at the overall picture. What's going on, what's moving the markets, etc. And man, as soon as you zoom out, it's pretty obvious. The market moved a little bit in the pre-market. We've got a gargantuan gap to the upside. First off, the S&P is leaving behind not just a big gap up, not just a big outside gap up, but it's gapping up above big levels like 3,500. That's the area that it's been stuck on for ages. And now we're gapping way up at the top. There's not really much up here to utilize unless you go backward quite a ways in price. And I don't even have enough days of data to really get that done. But it's a big gap up. And a lot of times when you see that kind of continuation to the upside, the first thing that you're going to expect to see is some profit taking, right? That's kind of the natural assumption, is seeing some profit taking out of the gates because, well, if any buyers were long and we open way up here, that's some pretty good icing on the cake, right? They're going to be pretty happy about that, and the market's going to start pulling back. Now, that doesn't necessarily mean right at the open, immediately start selling. But what it does mean is that when it's way up here like that, we've got to be a little bit cautious, and that's where you can zoom into faster time frames to see what's going on, especially when you look at the continuation and whether or not this big bear bar to start the day off, are they going to keep it going down? Are they going to keep it going up? What do they want to do? Now, they follow it through this big bear bar to the downside, but there's a huge wick all the way back up. And if we look at the faster time frame and kind of narrow in on what's going on there, that can give us some really big clues as to what's happening. That wick higher is right there. So with that continuation move to the upside, you can see this is, by the way, a 10-second chart of the MES. They started the day off with profit taking. What a shock, right? We see a bear move down. We get a second leg to the downside. The buyers try reversing all the way back up to the highs. And as soon as they hit the highs, it immediately reverses back off again. Now, you don't see that in that wick, but when you zoom into a faster time frame, that gives a huge amount of information that there's a lot of resistance there. And there is some serious pressure coming back down to try to force the market a little bit lower. And not only did it do it once, but if we continue on the way, we have a third candle down, really strong continuation. But wait a minute, do you remember on the 10-second chart? It went up there multiple times. So not only did it reject it the one time, but when they came back down to the low and we created a possible megaphone and possible resistance on the highs for the same reason, megaphone, it went up there and failed twice. And both times that it failed up there, it didn't just, kind of gradually roll over. It plummeted from there. It hit the high and then got obliterated. Hit the high, went consolidated, and then got obliterated. So it's not just a small amount of selling pressure. There's a lot of it's a bear engulfing candle to the downside. The bears mean some serious business here. So with the sellers coming in so aggressively off of the highs, you'd expect to see a bit of continuation. That's sort of the anticipation here. They moved back up to the highs twice and failed really heavily, and now they're breaking down below the lows. We've got 3 bear bars back to back to back, although the second bear bar kind of restarted the day since it was an engulfing candle. Either way, we've got some pretty good bearishness to the downside. And then we go into this sort of double top kind of pause scenario. Now, this doesn't necessarily scare sellers by any means, and it's certainly not going to get buyers interested. Even if it is gapping way up, and even if traders are buying on strength, there aren't many buyers who are going to look at that and say, all right, we've got a big gap up, now it's time for strength. That's the candle that I want to place my bets on, right? That's not the situation that's going to happen. It's too weak. So buyers will probably not buy it, and buyers will pick up on that, or sellers will pick up on that, and they'll start looking to potentially short underneath that for a continuation down. Not necessarily with the anticipation that it's going to collapse all the way back down, but at least get a short-term continuation lower because, well, realistically right now that just makes a little bit more sense. And they do get that follow through to the downside with a nice bear bar. And after that bear bar continuation lower, we've got a little bit more kind of forward momentum. The bears are pushing down. We're seeing new lows again. It's a nice bear bar closing pretty low. It had some wick on the bottom, but for the most part, it's closing pretty strong. So the trend is still staying intact. It's more likely that sellers will get a continuation to the downside, and if anything, maybe there's some falling channel resistance of some kind that they can also utilize maybe on a faster time frame. We get another continuation to the downside, and bears continue driving lower. Really nice bear bar again. Now, remember what we've been talking about the last couple of days. We've been implementing volume and kind of looking at, well, when we're driving lower and the volume is going up, then, well, technically, and at least to me, that would mean that people are buying, right? It's not selling when the volume is going up, when the price is dropping. The limit orders are picking the volume up. So when we're seeing volume increasing and prices dropping, that would indicate that there's some buying going on. But we're not seeing that. We're seeing good volume still, but it is lower, and the volume is still decreasing while the market's falling. That's a good clue that some people might be looking for a bit more continuation to the downside. It's still relatively early in the day. It's only going on 10 o'clock, and we've still got plenty of time until it goes into the 11 o'clock time frame where things start getting a little bit potentially choppy and gross. Now, another thing to consider is that this is obviously a huge gap up. Whoa, I know, surprise. This big giant gap to the upside, whenever you have that with a faster moving average like a 20 period EMA, and keep in mind EMA, the exponential part is what makes this kind of work in this case. When it's on the faster side between like 13 to 20 or so, I like 21, I like fib numbers, what can I say? But usually, if the market is going to stay up, the pullback will be weaker and it'll go more sideways than anything else. You'll see price action that's doing more of this. It might still have somewhat of an angle to it in the grand scheme of things, but realistically, all it's doing is going sideways until the moving average catches up to it. Now, like I've talked about before, there's nothing special about a moving average. It's an average. But realistically, what it's waiting for is the average volume to kind of catch back up. The top of it went too fast. Now the bottom's got to catch back up so it can stay supported. And that's where there's usually a bigger decision. You'll have the market come up or down in this case to meet the moving average. And then from there it'll decide, does it want to keep going up or is it going to end up reversing? And usually that test of the moving average is going to happen between 20 to 30 candles from the beginning. So we've got 5-minute bars, right? If we're looking 20 to 30 candles to the forward, that would put us at right about, that's 30 right there. And if we're looking at 20 candles, that would be right there. So within that time span is usually when the market is going to be coming in towards the moving average. So we've got plenty of time, and it might just go sideways until then. It might go rallying higher, whatever it wants to do, but eventually it's going to make its way over to the moving average by going up and the moving average catches up, or falling and catching the moving average. Right now, the market is falling down. We've got some nice bear bars to the downside, and we're not seeing any indication that the sellers are necessarily done. Well, okay, so a big giant bull bar to the upside is one good way to try to shut down the bears. That's going to make a lot of people nervous, but notice what happened. The market jumped up, and at the same time, we saw volume increasing. Now, what did we just talk about? If the market is moving down and volume is increasing, those are buyers. If the market is moving higher and the volume is going up, those are potentially sellers. We need to see what the follow through is. It's a really big, strong bull bar, and one of two things is usually going to happen off of this. We're going to see a massive reversal, or it's going to fall flat on its face. And it's usually not going to stay put around here for very long. So one way or the other, we're probably going to get moving. But given the context, given that the moving average is still below price, and this is the strongest bull bar that we've seen all day in an otherwise completely bearish day, if there's any failure from the bulls here, it's probably going to get rolled over back to the downside, and that's where we'll see it grind towards the moving average. And that's a really bad bull follow through. So that gives us some information, because buyers will be buying one tick above that bull bar. They're going to be looking for a continuation to the upside, and they see this. Now, put yourself in the shoes of a buyer who just bought that, and now you're staring down the face of this big bear bar. It's basically like looking down the barrel of a shotgun at this point, because, well, it doesn't have to go much further before it invalidates the trade, and guess where it's going? Probably the moving average. So buyers get a little bit nervous, like, whoa, wait a minute, ease up on the throttle a little. I wasn't expecting that. So if it does break down, we're probably going to see a flush to get towards the moving average. And if it fails to go lower, we're probably going to see these buyers, they might take a shot at getting out at break even. I don't know that they're going to want to hang around for very long if it starts showing responsiveness at that break even point. We've got a little bitty inside bear bar. It's an inside bar. This is the lowest volume candle the entire day has seen so far. It's not really giving us a whole lot of information other than the market's sort of pausing. It's pausing before it makes a decision, which we already knew was the case. So it doesn't really add any new information. One thing that we can potentially look at is the faster time frame and what it's doing there. And that's where, if we highlight this area right there, that little bear bar, that bear bar is at 10:15. If we swing over to the 10-second chart at 10:15, that is going to be right there. And we can see what's going on, right? I mean, the market is horrendously chopped up at that point. We've got this really gross-looking wedge. We've got a wedge going there. Maybe it's a descending wedge. Maybe this wedge is a little bit bigger. Maybe this wedge is a little bit wider. Maybe it's a mega. You can see there's a lot of confusion. It could go either way. Nobody's really sure what's going on, and that's why we have such a small little bar, and that's why the volume is also so low. There's no decisions being made because nobody's won the fight yet. Buyers are buying low, sellers are selling high, and it's just kind of found some balance. We know that buyers are potentially nervous from that rally higher, but now we've got to see what happens if they can come back. Are they going to utilize a pop higher to get out of break even and then roll the market back over? Or are we going to see another continuation leg to the upside with these bears failing? There's a lot of clues that we're still waiting for, and this inside bar doesn't really give us any info. Big bull bar to the upside and only slightly marginally increasing volume. That is still a sign that sellers are selling into this move, but not as aggressively as they were before. And the last time failed. So, I mean, if buyers are looking to get out of break even, it looks like at the very least they've got a pretty good shot at it. This isn't concerning anybody to really do anything. That's going to be a problem, though, because now we have a really strong bull bar to the upside. Buyers were feeling good, right? You could feel that optimism come back, like, oh, these goofy sellers don't know what they're doing. Look at this bull bar. We got him by the throat. And then that happens. All of a sudden, all that confidence, all of that cockiness goes right down the hole, because now they're kind of left thinking, wait a minute, am I holding the bag before that next leg down? That would be a two-legged correction back to the moving average. So a lot of buyers are starting to get nervous here, and a lot of those buyers will start jumping ship if this bear bar triggers. And noticing that there is zero interest on this move down, what is price doing? It's a bear bar down, and volume is the lowest it's been all day. What is that telling us? There is not a soul interested in buying this right now. It's all bearish pressure, and nobody's trying to step in the way of them. We get a continuation to the downside, really strong bear bar to the downside, and there again, that's even lower volume. That's the lowest volume now that we've seen all day. Everybody's, right now at least, from what volume's telling us, expecting the market to go lower. Otherwise, there'd be some buying here. There's none. So this would be a potential second sell to the downside. That would be a completion of a second leg to the downside, back to the moving average. You can kind of see how everything is coming together, and right now the sellers just look like they're getting started. We've got a really, really weak move, and what did the market do? This is a bull bar, and the market went up to the high of the previous bear bar, and what did we see? We saw the volume go up. What does that tell us? The market went higher and found sellers. It found more sellers, so many sellers, in fact, that it pushed it all the way back down here to barely close out the bull bar. That's not good. At least if you want to be a bull, that's really bad. So sellers are looking for another breakdown. That would be a double bottom breakout to the downside. And now, remember, buyers are stuck. right? They got stuck up here and they haven't been given a chance to get out of break even, and now we're seeing them jump ship even earlier. If any buyers are still left holding the bag, you better believe they're going to start jumping as soon as it starts cracking below that low. And that's likely where we start seeing that progression back towards the moving average again. Big healthy bear bar to the downside. Not exactly a surprise given the context. And now we're at a new low. It is closing at a new low, so that's a good sign, but we're also not at the moving average yet, so there's still time to go down. The big caveat is we finally pushed down to a new low, and now volume jumped right back up to normal. That's showing us that we are seeing sellers, at least in the short term, taking profit. Buyers are buying into I guess in this case, sellers are buying into this move down, exiting with profit targets, and it wouldn't be a surprise to see the market go a little bit nastier from here. It's probably not going to be as decisive as this last drive down. We've got a bear cycle lower. They broke it. We've got the next leg down. And if we're looking from a measured move perspective from top to bottom, we have our ABCD correction, which is right back to the moving. It's perfect. Everything is lining up to come back to the moving average still, which means that sellers are still looking for a bit more continuation. Now we have a little bit of a push higher, and we have a weak bull bar. And this is interesting because the volume backed off a little bit. We see less volume even though the market made a new high. And that could give us some information. We can see that sellers are obviously taking profit, but they're not necessarily interested in adding to their shorts. And that is likely because of the fact that the moving average is getting real close. It doesn't have to go very far anymore before those objectives are achieved. And if they start hitting those objectives, well, realistically, the risk versus reward, if they're shorting here and the risk is back at the top and the reward's down to the moving average, it just doesn't fit anymore. So there's less interest trying to drive the move down. They're waiting for more lows so they can take profit. We have another big push down, getting real close to the moving average now, and now the volume is jumping up again. That's indicative of something, right? We're seeing those traders taking profit going into the moving average, and who can blame them? We're coming right into that period of time where we're going into the lunchtime session at 11 o'clock. We've got that morning reversal, which really hasn't happened yet. And within the first 20 to 30 bars, we should be back to the moving average, which looks like it's a little ahead of schedule. Everything is lining up perfectly for sellers to start getting out of the way and buyers to start positioning. But it's still early for the buyers to start positioning, so they got to take it a little bit easy here. Inside bull bar to the upside, and it's a nice bull bar. We're getting closer to 11 o'clock, but the volume, nothing really there on that increase, so the sellers aren't really pushing back on it. And that's not a great sign, but that's kind of the same situation that we saw before. The last time the buyers tried to come in, nobody was really interested, and it closed weak and really didn't follow through. This time we've got lower volume, but it's closing a little bit better. We might be running into some issues here, and we're right next to that moving average. It feels like it's just right there, like just finish the job, get it over with, and then we can see these sellers turn into buyers and maybe flip the script. And then we get hang on, let me get the line out of the way. Oh, okay, so we get this wick back to the downside, and they got the moving average, right? Finally, they got the moving average. It's out of the way. It's a completion of the ABCD move to the downside, this orange arrow here. And we also have what? A big jump in volume, and it's the most volume that they've seen since this last rally to the upside. So the fact that we have that much volume coming in on potential falling resistance right around the corner, and we have hitting a major objective, we know for almost a 100% fact, there's no such thing as 100% in the markets, that's why I said almost, but a very good certainty that these sellers are taking profit going into this moving average, and it makes sense to see the market at the very least go sideways or potentially start bouncing. Generally, buyers aren't going to want to be the first one to the party unless they're able to buy low, and buying above a bull bar this early in the potential reversal, it's just too much of a risk yet. So buyers aren't going to want to buy high, they're going to want to buy low, and every time we see a move back down, we're probably going to see volume stepping up because now these sellers realize, wait a minute, we're back to the moving average. Now we're getting bull engulfing candles. There's obvious profit taking going on down here. They're going to start jumping ship. We get a rejection off of the falling resistance and a new low. Now, this is interesting. This big bear bar to the downside has no volume. The volume dropped off. So that's showing that, well, it went above and it went below. So this is a bear engulfing candle, but there's not really any interest. A lot of people are kind of sitting on the sidelines like, okay, we're at the moving average, and a lot of those moving average traders we've already seen take profit, so they don't have a reason to get out again at the same spot. So they're just kind of waiting. Like, oh, I mean, what's going to happen? Is it going to go farther down? Maybe it's going to go up. Maybe it's going to go down. Nobody really knows. We get a strong bull bar, but again, no volume. Everybody's still kind of waiting because it closed right on falling resistance. Who wants to buy there? That's a really bad spot to be a buyer. There's just no interest. A bear bar back to the downside, opened up above it and then closed back below. But there again, we've got another problem. It's closing above the moving average, which just acted as support. We're already past 11 o'clock and we're right on schedule, right? The first 20 to 30 candles, ding, 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 we're at the moving average. This is where if buyers are going to try to take over, they're going to be looking for a bullish reversal going into lunchtime. And that takes us past 11 o'clock to where we are now, which is, it looks like above this bull bar is what they're going to try to do. And you can see how long it's taken them to try to get that reversal going back to the upside. And we haven't even really seen if it wants to follow through yet. The volume's super dead. Either way, that's going to do it. And one of the big things really is just looking at the microscope, right? Looking through the microscope and seeing what's happening on that faster time frame. As the market's rejecting these areas, you can zoom into something like a 10-second chart and really paint a nice, clear picture as to what's going on. You can see those drives down. Are they taking profit? Yes. Okay, maybe I need to be careful the next time it comes down. Next time it comes down, more profit taking. You can see that picture being painted on the faster time frame, where on the slower one, it might end up just being a wick. So definitely something to pay attention to, but hopefully you found it useful, interesting, entertaining. As always, if you have any questions, feel free to shoot me an email, jhb@ssftg.com. Hope to see you in the 3-day trial if you haven't already signed up for it. Until the next video, have a great one, and we will see you all then. Thanks.